We now have Fernando Pareto, who is from Tower Capital, and Mark Wilkes from GT247.com. So, good morning, gentlemen. We've got a few results. The season's starting again, but let's start with property, and I know you have an interest in it, Fernando. Rebosis out today. It's an interesting, one of the smaller companies, but it has interesting empowerment credentials. What's your assessment there?
So, they did come out with the results this morning. It's a bit of a mixed bag. At first look, their distribution growth was on the bottom of management guidance at 7.1% at 92 cents a share. However, if you look at the operating metrics, we're actually seeing some good increases or decreases in vacancies. So vacancies came off from 2% to 1.9% at year end, and subsequent to year end, actually it's now sitting at 1.3%. Yeah. If we look at escalations on the retail book is at 7.1%, and the office side is 8.1%. So healthy escalations, good decrease in vacancies. However, if we look forward to the prospects and the management guidance for 2014 results, the distribution guidance was very poor. It's management are looking for between 5.4% and 7.7% increase in distributions. That's below our expectations of 8%. And I think if we look into it, it's probably due to the short-term dilution in Hemingway's as well as Blitz Street Mall, where they're undergoing expansionary and redevelopment activities, which is obviously going to have an impact on short-term earnings.
Mm. Mark, that's a lot of numbers he's got in his head. Can you do that?
If I need to.
But do you follow it, Rebosis?
No, I don't follow Rebosis. No, I follow the sector broadly, but it's not one of the counters that we deal with specifically.
Where does property sit at the moment then?
Look, I think it's very interesting because, I mean, over the last couple of years, we've seen the kind of expansion into the property sector is in a way disintermediating the banks in terms of activity in that sector and taking advantage of the relatively low cost of funding and translating that into an earning stream against where they're securing their earnings. Mm. So I think, look, the sector has been doing very, very well and is kind of set up to do well as long as the interest rate structure remains moderately predictable. Mm.
Let's hope so. But another property company that published an update yesterday, Fernando, was into property. Q3 update, as far as I understand, it was a fairly good one.
It is. I think that's a company that's starting to turn the corner. We've seen an improving macro environment in the UK, increased forecast for real GDP growth, as well as decreasing unemployment, as well as the consumer confidence levels being as high as levels we've seen in 2007. So I think the macro environment is definitely improving. The question is how large an impact and when this impact will feed through into it is probably the biggest question. And if we look at the metrics, we see that vacancies have now stabilized at 5%, and net like-for-like growth and rental growth has come off at 8% increase, which is very good to a trend that was actually decreasing in the last two quarters. So if we look at those metrics, as well as the valuation where Into is currently sitting at a 12% discount to NAV compared to its peers of the likes of British Land and Hammerson, it's definitely looking like a good entry point into properties at the moment.
Of course, Liberty International is the name it was known by. David Fischel's been the CEO there for a long time. Mark, on a big picture level, and then Fernando can talk perhaps from a property expert perspective, the AECI Chinese company land deal. Now that came out on SENS. It announced this 1 billion rand value of the deal, and they were going to make what in the newspaper this morning says a new New York City there. Now it seemed to be a deal that was announced, but it's actually got some traction in the discussion here. It's a big Chinese company. The issue also is this price, this round number of 1 billion. Is it the right price? How much are they getting for it? So it seems like there are more issues than we thought of here. Yeah,
look, I mean, there's a little bit of a surprise aspect to the entire thing. There have been stories floating around about this tract of ground for quite a long time, like the last couple of years or so. And there's been a few kind of pushed and withdrawn kind of deals over that time period. And I understand the deal has taken a long time to kind of engineer and put together. Yes, on a headline basis, I think it is quite a positive development, a positive announcement. It can only be perceived in a kind of positive light.
Well, yesterday I referred to it as a baby Beijing. Let's see if it actually happens. But we did get some perspective from Shanghai Zendai's Dai Xingkeng. That's the founder as well as chairman of and chief executive of the Zendai Group. And he explained a little bit more about what the land will be used for.
For business, I'm confident it's a good transaction. We're sure to make a profit, of course. But of course in China we also have many chances to make money. Make money is for entrepreneur, it's easy to make money. Every space. I'm even thinking last month to invest in Los Angeles. But anyhow, I like Africa. Yesterday I paid money for the land. But I speak to the journalists, to the AECI friends. But I say, I pay the land, but it's not the land belongs to me, but I belong to the land. I love Africa. I love the people here.
So just to summarize,
This land give me inspiration, passion to start entrepreneurship again. 20 years ago, I started my business as a founder, as an entrepreneur. I'm already like approaching 50. I can retire. I can transfer to my children. They are approaching to graduate. But this land gives me inspiration to create again, to create a new future city. It could not happen in China. In China, the money I paid here, I could only buy a cake, a cake of land. So the government control everything. You can only be a landlord for temporary time. For developer, government asks you to finish development in 2 years. So this land, the big land, really give me a dream. I can make a dream here.
And that was Daisy Kang, founder as well as chairman of and chief executive of the Zendai Group. Fernando, you heard his sentiments there. He's inspired, and for the same amount of money in China, he would have gotten a cake, to use his words. So what does this reflect with regard to South Africa's property valuations?
I mean, the market was expecting around 900 million for the piece of land. So we saw the share price actually move due to it. Just the mere fact that a foreigner has bought into South Africa, into a huge piece of land, development land, has been talked about for 2 years, I think you can expect a premium to be paid to the land, just on the fact that local developers weren't able to meet the price.
Just on that 900 million, do you think it's a justified price? Is our land really worth that much?
I think just due to the size and the zoning rights on that land, I think that it's definitely worth 900 million rand. We're seeing Waterfall Estate coming up soon, which is obviously another huge precinct, another huge talking point surrounding the look and feel of Sandton and the surroundings of Gauteng in the next 10 years. I think this could also be another new precinct that we might see come up in 5 years.
Of course, and as we said yesterday, AECI and Tongaat Hewlett are two companies whose core business is not land, but they've made a great deal of money out of it. So it can't go on forever, but certainly of interest to investors. ArcelorMittal South Africa and Kumba Iron Ore have signed a new supply agreement. That came out yesterday, and Kumba CEO Norman Mbazima and Nku Nyembezi Haita, who's the CEO of ArcelorMittal, explained more about that deal. So let's have a look there.
A significant milestone for both companies today, but particularly for South African steel, given the certainty of supply that it gives to us as the primary producer and to our customers who depend on us for steel. That's the first thing. Secondly, we can get out of the business of making lawyers rich and get back into looking after the operation. So all in all, a great deal for all concerned.
we have to have an agreement, and we have to have a relationship that regulates what happens between a customer and a supplier. This whole thing started because the MPRDA changed the rules of how mineral rights are held, and that's what it was. If there hadn't been that change, I think none of this would have happened. As Wena said, we're still in a position where we're waiting for final outcome of the Concord. But in the meantime, I think that going forward, we have an agreement which will last for the life of the Sishen mine.
Kumba Iron Ore CEO Norman Mbazima and Nku Nyembezi Haita, who's the CEO of ArcelorMittal. Mark, all friends now by the looks of it, but it wasn't so for a while, and they failed to renew their right, which looked like carelessness at the time, and then there was the award to ICT, when the rights over the mining and so on. Okay, all that's behind us. It only came out yesterday afternoon at about 4:30, 4:45, so I'm not sure the market's digested this. As far as it did digest it, ArcelorMittal was down nearly 4% and Kumba was up 2.5%. Does that seem to reflect what this deal's about?
To a certain degree, it's a nice Diwali present, by the way, for the economy. Look, the Kumba price did react pretty quickly. I wasn't, excuse me, watching Arcelor too carefully. Did respond, did flip up on the announcements, and then kind of subsided a touch into the auction as such. Look, I mean, it's undoubtedly a fairly good deal in the sense that it eliminates a lot of massive amounts of uncertainty, especially with regards to Arcelor's situation as such. Cost plus 20 is a lot more than cost plus 3, but nonetheless it does kind of stabilize the unknown as such. Moving forward, very, very problematic. I think still a lot of problems still remain in the steel sector with regards to government's plans moving forward into the actual costing and pricing of steel. Kumba, it's 6.25 million tonnes, which they're getting a bit more revenue on. So, I mean, it kind of does impact them in a positive light as well.
Moving on to another resources company, Anglo Gold Ashanti. They've just come out with their numbers showing at least a 12% increase in production. I know you don't follow gold mining companies too closely, but I think it's nice to see a turn in the tide where they've been pressurized by labor unrest as well as a declining gold production. But looking at Anglo Gold as well as results from Village Main, it seems as though there's a slight pickup there.
I think we have seen a bit of sentiment in the gold price as recently. It's a bit of pickup there, obviously playing into the sector. Whether or not this can last, that's the big question. The costs are obviously still increasing on the production side. I think it's a sector still to look at in terms of the long term, but short term headwinds are definitely out of favour for the sector.
Well, we got numbers out from Anglo Gold Ashanti today and Mediclinic as well. Basic normalised headline earnings up 58%. But an interesting company that caught my eye, Mark, was Mazor. Small construction company, their revenue around about 250 million rand. They're the ones who put cladding on buildings, so glass and aluminium, and that's when the building's finished, they sort of finish it off. So it's at the end of the production process. So it's a small but effective company. Their headline earnings up quite strongly, but for me, this is the quote from their results announcement. They are confident that the construction sector has turned a corner. Demand is stronger and set to improve further. Substantial projects expected in the next 12 months. That's very positive for construction. Now, these are the guys exposed to it, and they're saying this.
Yeah, look, it's interesting in the sense that the large cap stocks in the sector have been performing very well of late. The niche, or by and large, kind of more specialised and niche sectors are also experiencing or forecasting a more positive kind of turn of events. Yes, I mean, it begins to build on that positive kind of momentum beginning to creep into a sector which has bombed over the last couple of years or so.
More broadly, the market was up again yesterday, so where are we going?
It's difficult, very, very difficult market to read at the moment. We're largely benefiting from the depreciation of the rand. Rand depreciating on the basis of forecast perhaps Eurozone rate cuts, dodgy numbers coming out of Spain, dodgy political situation in Italy, a lot of kind of problems stored out there. Our own labour situation here is also beginning to kind of take the headlines again. So we saw a very, very largely resource-led and commodity-led kind of flip yesterday as such, not flip, but mark up. Yeah, we're basically tracking the rand at the moment. So a lot of core domestic revenue producing companies, the bank sector, etc., are marking down. So it's very, very difficult. We're largely at the kind of the whims of where the rand is going at the moment.